Joining us is Joseph Capurso, economist with the Commonwealth Bank. Welcome, Joseph.
It's nice to be here.
Joseph, do you believe Australia can avoid a recession despite the financial gloom flowing through developed and developing economies?
We're very confident that Australia can get through this very tough period in good shape. We think that the tax cuts by the government, the very big interest rate cuts by the Reserve Bank, and the government's economic stimulus package should help Australia through the tricky period over the next 6 months or so.
What effect then do you think the 1% rate cut will have on the mortgage market, and do you think another cut is needed to properly stimulate it?
Well, housing and the property market more generally is a very interest rate sensitive part of the economy. So the big locking off of interest rates by the Reserve Bank and the commercial banks should provide a significant stimulus to the housing market. Add on top of that the government's temporary increase in the first homeowners grant, which for new housing is very generous. We'd expect a significant stimulus to the housing market over the next year or so. But one thing we would caution on is that the increase in the first homeowners grant is only temporary. It ends on 1 July next year. So we think that you'll get a bring forward of activity from what you would have had from the middle of next year towards the early part of next year. So real estate agents could be quite busy in the first half of next year, but after that things could slow down again.
What do you think of the federal government's decision to double to $8 billion the amount it will spend on residential mortgage-backed securities to boost competition in the mortgage market?
Well, $8 billion sounds like a lot of money, but it actually only represents about 2 weeks of new mortgage financing. So we actually don't think that there's going to be a large long-term effect on the mortgage market. What I think we do need to see is private investors wanting to buy these sorts of securities, and given the current investor aversion to these sorts of securities, we think that could be some time off.
Finally, Joseph Capurso, what points will you touch on in your presentation to the Mortgage Industry Forum 2008 in Sydney on the 25th and 26th of November?
Well, I'll start with how the fluctuations in international commodity markets and the international economy is affecting our economy. Then I'll talk about what we see as the outlook for the Australian economy, in particular interest rates, and then I'll draw implications for what that means for the Australian housing market.
Joseph, thanks for talking to us, and we look forward to your presentation at the conference.
Thank you.